Okay, let's break this down. Inflation is coming in lower than expected, which should be great news, but the market is barely reacting. We just got two big reports, the CPI and the PPI. And if you don't know what those mean, don't worry. I'll explain it all in plain English. But here's the real question. Why is Wall Street ignoring this? And what does it mean for you, your money, and your next big financial move? Stick with me, because by the end of this, you're going to understand exactly what's happening, why the market is asleep at the wheel, and what you should be paying attention to. So what just happened? Let's break this down. So let's start with what we just learned. First up, the CPI, which is the Consumer Price Index. This tells us how much prices have changed for the things you actually buy, like food, gas, rent, and everyday essentials. Second, the PPI, which is the Producer's Price Index. This measures how businesses are paying to produce the goods before they even hit the shelves. Now, here's the big takeaway. Both CPI and PPI came in lower than expected. That's a sign that inflation is slowing. Now, CPI dropped from 3% to 2.8%. That means the prices you pay aren't going up as fast. PPI was expected to go up a little bit, but it actually stayed flat, meaning businesses are not raising prices as aggressively as before. This is exactly what the Federal Reserve wants to see before they start cutting interest rates. So why is nobody celebrating? Well, the bond market is flat. The stock market, it's shaky. Normally, good inflation news like this should mean lower mortgage rates and lower borrowing costs and a boost to stocks. But investors are hesitating, and there are a few reasons for that. Well, reason number one is obviously the tariffs and the trade wars. Right now, trade tensions are heating up again. New tariffs mean higher costs on imported goods, which could reverse some of the inflation progress in the coming months. Investors, well, they're worried that today's good news could be wiped up if the new trade barriers push prices back up. Reason number two, the shelter cost delay. This one is huge. The biggest piece of CPI is rent and housing costs. But here's the catch. The way the government measures rent is months way back behind reality. If you look at real-time data from Zillow, Redfin, or Apartment List, rents are barely rising right now. Now, if we plug those numbers into CPI today, inflation would already be at 2%, which is exactly where the Fed wants. But because of how CPI is calculated, we're seeing old numbers that make inflation look worse than it actually is. Reason number three, investors hate uncertainty. There's a lot of noise in the market right now. Economic reports, Fed speculation, global tensions, and when investors don't feel confident, they don't buy. Instead, they wait. And that's why the market is barely moving, even with the good inflation news. But what does that mean to you? If you're thinking about buying a house, mortgage rates are already trending lower. If this inflation trend continues, expect rates to keep dropping. Just not overnight. This is the first real step towards borrowing costs. Now, if you're watching the stock market, the Fed is paying close attention to these reports. Rate cuts are coming, but markets are very slow to react. The real moves will happen once the Fed officially signals their next step. Now, if you run a business or manage investments, lower inflation means lower costs down the road. But in short term, uncertainty might keep things choppy. Now is the time to be watching this data very close. Now, what's the big picture and what's next? Here's the bottom line. Inflation is falling, but the market is not reacting to it yet. Think of this like you're at a traffic light, it turns green, but nobody's moving. That's where we are right now. The data is telling us go, but the market is like, hey. So what should you do? First of all, pay attention to the upcoming inflation reports. If these trends continue, mortgage rates will trend lower. 2, watch for the Fed signals. Their next meeting is right around the corner. They're not going to cut rates yet, but they could drop hints about what's coming next. 3rd, don't sleep on the market reactions. Once the market wakes up to what's happening, things are going to move really fast. So now I want to hear from you. Is the market ignoring the obvious, or is there something that we're not seeing? Drop a comment below. I want to know your thoughts. And if you want real talk on the economy, markets, and mortgage rates, make sure you're following me. Big moves are coming. Stay ahead of them. This is Real Talk. It's not fake news. And his Team Loan Depot.